Welcome to this explainer. Okay, today we're taking the dense, let's face it, highly complex 2026 GST compliance updates and transforming them into what is basically an urgent survival guide for your working capital. If you run a GST-registered business in India, the rules of the game are radically shifting right under our feet. And honestly, what you don't know about these upcoming changes can absolutely trap your cash flow. We're going to break it all down so you can stay ahead of the curve.
All right, let's just dive right into this by confronting a massive, honestly dangerous misconception that so many business owners still firmly believe. If I paid the GST, I'll get the credit, right? I mean, for years, that was the standard operating logic. You make a purchase, you pay the tax on the invoice, and eventually, whether it's this month or next, it all magically balances out in your input tax credit claims. Well, I need to shatter this myth right now, pretty bluntly. This is absolutely no longer true in 2026. In this entirely new compliance landscape, the whole risk model has completely flipped. A supplier's filing mistake, or even just a vendor filing late, instantly becomes your cash flow problem. You literally cannot assume you'll seamlessly get credit just because you genuinely paid the GST. Your claimable credit is now inextricably tied to your vendor's accuracy. It's wild, but that's the reality. To help you navigate all this, here is our roadmap for today's explainer. We'll cover 1. The end of easy credit. 2. The 2026 ITC locking waves. 3. The 3-year time bar. 4. IMS, which is your new defense. And finally, 5. Your 2026 survival guide. Let's get moving. So, part 1, the end of easy credit and the massive paradigm shift driving all of this. To understand exactly why the government is enforcing these aggressive new locks, we really just have to look at this absolutely staggering number, 1.94 lakh crore rupees. Now, that's not a yearly target. That is the GST collection for just the month of May 2026 alone. Think about that. The government isn't just creating red tape for the fun of it, They are locking down the system to ensure that every single rupee of this massive revenue is validated right down to the individual invoice level. And the data shows this compliance tightening is actively widening the tax base. The climb is incredibly steep. Collections went from 1.75 lakh crore in December 2025, shot up to 1.93 in January 2026, and then hit that 1.94 mark in May. That is a 3.2% year-over-year rise. What this proves, without a doubt, is that these strict enforcement measures are highly effective, which practically guarantees they are here to stay for good. Moving on to part 2. The 2026 ITC locking waves and how the net is closing. If we walk chronologically through these tightening waves, you can really see how the net has been closing in. Back in July 2025, the GSTR-3B outward liability lock went live. That meant outward figures auto-populated and, bam, couldn't be manually edited anymore. Then, in December 2025, time bar enforcement began. By April 2026, new invoicing rules hit. But here's the absolute critical moment, the one you must prepare for right now. The expected July 2026 GSTR-2B ITC lock. Listen, once this goes live, your credit will be restricted exactly to what GSTR-2B shows. Literally, no exceptions. All right, part 3, the 3-year time bar, which means permanent blocks. So, since December 1st, 2025, the GST portal enforces a super strict 3-year time bar, and the rule is absolute. Returns more than 3 years past due are permanently blocked from filing. This means older reconciliation errors, say from way back in FY 2020-21, they are now completely unfixable on the portal. You can't just log in on a Sunday afternoon and clean up the past anymore. Now, sure, a discretionary route does technically exist to unbar them, but it requires jurisdictional officer approval. That's incredibly slow and, let's be real, it invites some heavy scrutiny into your books. Alongside that time bar, we also had a few other critical 2026 updates roll out. The good news? Post-sale discounts no longer need a pre-agreement, and removing the intermediary services rule is a real game changer that really helps exporters. But I want to give you a very strong warning on the point about mandatory fresh document numbering. Continuing your last year's invoice numbering series into FY 26-27, that creates massive reconciliation issues and major scrutiny risks. If you haven't updated your billing systems yet, do it immediately. Which brings us to part 4, IMS, your new defense to protect your capital.
Okay, so the crucial point here is really getting a handle on this jargon, starting with GSTR2B. In the past, maybe your accountant treated this as just, a helpful reference document to check against. Yeah, not anymore. GSTR2B is the auto-drafted statement of eligible ITC generated purely from what your suppliers file. With the upcoming locks we just talked about, it becomes the absolute hard ceiling on your claims. Look, if it's not in the 2B, you are not getting the credit, period. Next up, we really need to talk about the Invoice Management System, or IMS. Please do not look at this as just another bureaucratic hurdle. Seriously, IMS is a facility right on the portal that lets you actively accept or reject specific supplier invoices and actually recompute your GSTR2B before you file your 3B. I want you to start viewing this as your essential real-time shield against other people's filing mistakes. The paradigm shift here is honestly incredibly clear when you really think about it. In the old era, compliance was mostly about knowing your basic tax slabs, using those manual monthly spreadsheets, and just fixing errors whenever you had the time. But the new era, it is entirely about operational discipline. It absolutely demands proactive, weekly IMS approvals and navigating those strict 3-year time bars. Listen to me on this one. If your business is still relying on manual spreadsheets at month end, you are entirely exposed to a sudden ITC denial in 2026. And finally, Part 5, your 2026 Survival Guide with actionable takeaways. Now, these aren't just defensive tactics. These 3 specific habits are exactly what will give your business a serious competitive advantage while fiercely safeguarding your cash flow. Step 1, reconcile your GSTR2B weekly, not monthly, weekly. Step 2, actively accept or reject invoices in the IMS. Please do not let them just sit there unresolved. And step 3, proactively chase your vendors for correct GSTR1 filings. Do not wait for your CA to tap you on the shoulder and tell you there's a problem 3 weeks later. You've got to be on it. And to put all of this into immediate practice, please make a note of these upcoming critical deadlines. July 13th, 2026 is when the Q1 GSTR1 is due for quarterly filers. July 18th is the CMP08 deadline for composition dealers. And please, I can't stress this enough, clear any pending old returns before they hit that 3-year bar we talked about. Filing your own returns on time is literally just as crucial. Because if you slip up, you inadvertently block your buyer's credit, which just compounds the cash flow issue across the entire supply chain. I want to wrap up this explainer by leaving you with this pretty provocative truth. Your vendors control your cash flow now. So ask yourself, are they ready? Because if they aren't compliant, your money is what gets stuck. Take a really close look at your supply chain compliance immediately. Get into the IMS and start building those weekly habits today. But it really begs the question, as the GST portal becomes this fully automated, hyper-interconnected web, how long until AI starts automatically blocking your non-compliant vendors for you? Pretty wild to think about. Thank you so much for joining me today. Stay proactive out there and protect that working capital.